Robschild. No investment advice. Welcome to the show where we view financial markets using Ben Graham's investment philosophy, macro, technicals, and crystal ball gazing in that order. Today is Tuesday, November 19th, 2024. Today's episode, we will start by discussing Walmart earnings. Coming out this morning before the open at an earnings per share of 58 cents. So let's take a look to see what happened. Well, it looks like the price went up, closing a total of 3% higher than the previous day's close, although we have a very large tail on top of the candle, suggesting that this is a very strong signal that this is actually a reversal candle here. Walmart sitting around a PE ratio of 40, paying $40 per dollar of earnings of return. That's really expensive, especially for a company like Walmart. This isn't a techie growth company that's going to be, increasing its revenue by, doubling its revenue every year for the next 5 to 10 years. This is Walmart. They sell, paper towels and stuff. It has a very high valuation, and so for its high PE ratio to make sense, well, it better have really good looking earnings. Let's take a look. The first place I like to look is macro trends Walmart EPS. Since today's report came out at 58 cents for the quarter, how does that relate to what has been going on in the past? And as you can see from this chart, that doesn't seem like super phenomenal earnings. In fact, if we look at the past 3 quarters, it's around average. It was this is quarter 4 of 2023, reporting in January of 2024 at 67 cents for the quarter, and then 63 cents, and then 56 cents for the second quarter of 2024, and for the third quarter, like I said in the beginning, it's 58 cents. It doesn't show it on this chart here, but it's not like it's a lot higher than very previously. Even in 2023, we had one rating of 97 cents surrounded by a much lower bar. So if you average this out, this is certainly not explosive growth, which would be needed to constitute a very high PE ratio. And if we go to the top of the page here, we can click on price ratios itself to take a look at the history of the price ratio. And as you can see here, it is the price ratio of this company. Throughout the 2010s, we were hovering a normal valuation of what most people would consider to be a value stock, a value company, which Walmart, it's probably a value company. Considering the business, that would make a lot of sense back in the 2010s, trading at $10. So if you bought $10 of Walmart stock, that $10 earned $1 of earnings. And today, sitting as the most updated version of this, is at $43 for $1 of earnings. Very expensive compared to its past, suggesting that it wouldn't, if earnings were to contract, if we were to go into a slowdown, like all of the data suggests, with the daily reminders and everything. Again, watch Monday's show for a review of all the daily reminders. It wouldn't be extraordinary for the price of Walmart stock to drop by 75%. That would actually bring it to today to a PE ratio of 10, which in its past is a normal valuation for this business. When I say stocks are in a bubble, they are in a bubble right now. The ride down is going to be rough for a lot of people, especially considering the fact, take a look at 2022. People have been investing in this company. In 2022, we were at a price of $45 a share, now at double the price. And the most unfortunate reality about this situation that I mentioned yesterday is that when prices get this high in things like Walmart, people get so comfortable. They get they feel very safe holding Walmart stock, being at an all-time high, being at a valuation of a PE ratio of 43 according to that chart. And right now it's still obviously somewhere around there. I don't know the exact number. Point is, this is not safe. This is the opposite of safe. When you are buying a stock at a very, very low price, that's a very safe investment. When something is extremely expensive, such as Walmart stock is today, this is an extremely dangerous stock. And for all of the people holding it right now, a lot of people are going to be hurt. A lot of people are going to get the rug pulled from under them thinking that they are invested safely when they are in fact not invested safely at all, not at these valuations. Second main item of today's agenda, NVIDIA earnings is coming out tomorrow after the close. If you've been following the show, we'll get to the chart momentarily. You know that I'm very bearish on the semiconductor industry, and NVIDIA is a huge part of this industry. And unless this company comes out with miraculous earnings coming out, I suspect, I see very clearly in my crystal ball, the entire semiconductor market is about to really fall apart here. And I'm betting on it. I'm currently short still with SOXS. Before we get into the charts, daily reminders remain the same. The CAPE ratio jumped back up to 38 today. If you want to hear me read through the very important daily reminders, please watch Monday's show. That would be November 18th, 11/18/24. It's the one with the castle in the ball and the snakes around it. Even though I read through these only once a week, these are highly important things to be aware of from a macro standpoint if you are an active investor. On to the charts. We'll start with the S&P 500, the SPX moving sideways here. Looking like we're catching this break for now. If NVIDIA earnings tomorrow after the bell comes out very weak, I would suspect that would add a lot of bearishness to like all markets, basically. We'll see what happens. Thursday will be very telling off of the back of the NVIDIA earnings report. TNX, the 10-year Treasury note yield, this purple line, the top of March 2021, going until today, forming this ginormous head and shoulders top. I've been saying we've been fighting a battle here, and we never got a confirmation close above the breakout candle above this purple line. It never happened, and today we actually closed solidly below the line. I am seeing very clearly in my crystal ball here that rates, longer rates are going to be dropping here. I think that this was the last shakeout of weak hands of longer duration treasuries, so treasury notes and bonds. As you probably know in the show, I have 55% of my own portfolio in long duration treasury bonds like TLT, but with a little bit more leverage. If the stars align correctly, which I suspect they will, here's how it's easy for me to imagine a scenario playing out where after the close on Wednesday, NVIDIA comes out with their earnings, and maybe they're good. Maybe they're even good, but we all know that, eventually the music stops and people realize that trees don't grow forever in height, in regarding price of an industry, and that really the semiconductor industry as a whole eventually will become value stocks, not tech stocks. And if the whole market starts rolling over off of, Mr. Market waking up a little bit, I do suspect there will be a rush into treasuries at this point. And it's already set up we're already setting up for treasuries to do well here. As I've been saying, this looks like a bottom in TLT. We've had divergences in the price in the RSI suggesting there's a bottom, also a broadening, falling wedge at the bottom of a drop in TLT. So, TLT is my favorite place to be. This chart today adds to my confidence that yields will be rolling over. I wanted to bring up the 10-year break-even inflation rate. Again, this is, the difference between Treasury inflation-protected securities, the TIPS market, and the yields on regular 10-year notes. And the way they work is people basically are gambling or betting enormous amounts of money on what inflation is going to be over the next 10 years. And this market is just it's starting to get really flat, since the 13th for about a week. We haven't been like budging. And so from my perspective, it looks like we're setting up for a breakout. And I believe the breakout will be to the downside, not to the upside. So we need to continue keeping tabs on it. The dollar, as far as a technical pattern, I've been saying how expensive the dollar has been getting and how scary that is for worldwide economies. A strong dollar is not necessarily a good thing, especially for the euro dollar system where you have so much international debt denominated in dollars. When dollars get expensive, watch out for those black swan events. And this chart, there's nothing bearish looking about this chart. This is like a pretty sharp move to the downside. It looks more like a bear flag than anything. If this was really rolling over, it would look different. From my perspective, it looks like it's setting up to rip higher, which again, with all of those other predictions, specifically this week, specifically for Thursday, if all of these things play out the way I imagine them, the dollar's about to rip higher here. Bitcoin catching my eye today, still looking as bullish as can be. Very, very solid bull flag here. There's no other way to put it. However, as other traders have noted, Bitcoin has begun to act more like the stock market lately. Again, with the stock market being so overpriced, there's a lot of speculative value in the price of like the S&P 500, and Bitcoin being essentially a 100% speculative asset class, I guess we could say. It's no surprise to see these markets correlated. And if the S&P, stocks crash, I doubt that there will be a rush into Bitcoin. We could have Bitcoin follow stocks lower. So even though the chart pattern is feeling and setting up for a very bullish move, even if I was a day trader, day trading this thing, I would be very cautious here. I wouldn't be buying Bitcoin even with this chart pattern set up. And that's from my macro views more than anything. Not all stocks are insanely overvalued. I haven't talked about it for a while, but if you've been following the show, you might know I'm about 10% invested in Brazilian equities. And so EWZ and EWZS, if you want to get a little bit more leverage, a little more beta on Brazilian stocks. Brazilian stocks are a long, underinvested, highly suppressed market. These stocks pay enormous dividends, and they're selling like they're at like trash values. Like this is like a trash price right now. And so I'm very happy to be in this market. Only wish I had more money to put into it right now. I bring it up because this is pretty clearly a downward looking wedge. It looks like we may be about to break out to the upside here, and we're bumping along a similar low previously seen in June. I think this is and then also in October of 2023. So this is setting up for a potential pop to the upside in Brazil, especially if Mr. Market wakes up to the fact of how overvalued US stocks are and needs to find somewhere else to go. It would make sense to come here. I mean, I don't care if it comes here or not. I don't really care about the value of EWZ either. The dividend's so big, it's like you can just sit in here forever and do really well for yourself. Mr. Market's really sleeping on this one. Can't wait for him to wake up. I've been talking about wood with this head and shoulders pattern. I called it out before the right shoulder even stopped forming. We beautifully broke this neckline and retested it yesterday, and now we're closing below it. This is a pretty darn clear indicator with very high probability that wood is headed lower, and when wood goes down in price, a lot of other things can follow it. I love this wood ETF. I like to use it as one of the leading indicators in this chart pattern. You know, basically a crystal ball rating, but it seems like all the stars are lining up here for things to really roll over, like right now. Last chart of the day, I brought it up at the beginning of the show, SMH. This is the semiconductor ETF that it also can act as a leading indicator, especially considering how much money has been poured into this industry, much like money was pouring into the railroads, much like money was poured into car manufacturing, much like money was pumped into .com companies. I mean, how many times do we have to relive the same darn story before Mr. Market smartens up? He'll never smarten up. People will always be emotional and dumb, and Mr. Market will always be found every once in a while driving 100 miles an hour the wrong way down a highway. And today, specifically SMH popping up a little bit to test. It looks like it's testing the line of this very small head and shoulders top within this ascending wedge that broke to the downside, within this giant head and shoulders top full of just like enormously powerful engulfing red candles. We can't control what Mr. Market does, what he ends up deciding to do, but I don't know. I feel like I've never seen anything more clear in my life, and I am still short this with SOXS with a pretty hefty position. And that's all for today's show. That's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.